Well, hello my friends, thank you so much for joining me. I hope you're all doing very well out there. And here we are, just saying hello. So, thanks so much for joining me. My name's Rocky Outcrop. We're going to be doing a live stream here, doing crypto technical analysis, doing Bitcoin, Ethereum, Chainlink, and Tezos, and suggestions from the people watching along. So thank you so much for joining me. Good to see you in there, Zoner, Horn Hunter, Trade Spotting, and Nav and Ethan. And let's see if anybody else tunes in and you want to give me a wee comment in there, then I will read out your name and say hello to you. Hope you're all doing very well. And the question for today's episode is, will Bitcoin be going to $1 million or down to $0? That's what we need to find out. And by looking at the charts over the period of the next sort of 5 minutes or so, we'll get some definitive answers on that one for us. Let's just roll the intro clips and I'll see you in the live scene in a second or two. Hello my friends, well thank you so much for joining me, and here we have up behind us the 24-hour Bitcoin chart. I suppose maybe I can start off by framing today's chat about the title of today's live stream video, you know, new week, new trend, question mark. Well, if we do have a new trend down the way over the period of the next week, for instance, or, you know, while the trend may still remain bullish, maybe we have some movement towards that direction, for instance, or, you know, perhaps maybe we continue on with the old trend, or the current trend, whatever language you want to use. What would that look like? And it could look like the price is coming down towards 17,300 or 17,250, like we suggested recently with regards to this Bollinger Band here on the monthly time frame. Now, that of course is still a million miles from where we are, and actually we're in and around about this 19,000 area, diving all the way from one extreme to the other, bringing up the 15-minute chart here. And as you'll notice in today's episode, by the way, everybody, you can see the numbers on the axis are now on the right-hand side. Let me know which side you prefer them on. I think because most people would have them this way at home, I've decided to put them on this side of the chart, although it is maybe better for the overall view to have them on the left. Whatever. On the 15-minute chart here, you can see that we did extend outside of the Bollinger Bands and then sort of claw ourselves back in towards them and capture that 19,000 price yet again. Looking back over the period of this last 15-minute candle, we have been bouncing around between the 18,950 area and the 19,050 or 19,025 price point, and even going on further down just to kind of have a look at things, you can see that we're kind of conforming to the Bollinger Bands here on the 5-minute time frame as well. During the period of this episode, shall we see if we actually manage to maintain prices first off above this sort of high 18,900 level, not going back down to that 50 again, and can we trace this Bollinger Band towards the top side and see if we get any positive price action. Now, with regards to the two questions then, first off, the title of the video, and secondly, of course, the intro clip there. First off, are we going to $1 million or $0? Well, let's start with the big question of the day. Are we going to $1 million or $0? Just give me a quick second to look at the chart here and figure this one out. Oh, I'll give the wee 8 ball a shake. It comes back. Sorry, it's inconclusive. We're going to have to check it again on this one in the future, I'm afraid. With regards to what are we having a potential for a new trend coming in here? Well, you can see that we have this top in here so far, this local high, where we put in the all-time highs in and around about my birthday and the following day. And what we can see is that this price action so far has not managed to then continue to trace towards the top side. Instead, we're potentially kind of consolidating in here. And on the 24-hour time frame, you can see that that means we've also moved away from the top end of those Bollinger Bands back towards the middle line. We haven't properly tested the 20 moving average since our previous lows, and those previous lows did come down below that 17,000 area. So the idea of kind of looking down towards there isn't incredibly outlandish. Of course, sticking a couple of Fibonacci retracements back on there, and you can see that from our previous lows down here at that 16,900 area or so, up towards our highs then at the 19,900s area or so, that we're actually in here challenging the 236. And if I zoom on in a bit more and go down the time frames then to draw in this story, are we going to be taking this out? And over the next wee while, that's kind of what the the eyeballs will be looking towards is probably this area just here. Excuse my voice. If we just zoom out a bit, you can see this is obviously now starting to form one of these nodes. Of course, breaking past this area, we could then look back at it and say this is a good area for potential support should we need it to be, which is obviously the sort of the silver lining on any consolidation during a trend. And of course, then if we do break down below this area, then we're looking up here and saying, well, that's a fairly hefty chunk of resistance up above. Should we be going back up towards that, in it around about where that 236 currently resides? So breaking down past that area over the period of the next couple of days does bring in those sorts of negative stories that we're talking about on Friday. And the truth is, we went into the weekend with weakness, as we discussed in Friday's episode, and actually, you know, we've come out of it with a degree of weakness still there, giving us that aftertaste of the weekend. And we haven't managed to break up above these key areas really and spend a long time up there, pushing towards the top side. Of course, we did spend, I suppose you could say we spent a long time up there over the period of the 6th and 7th here, up above this 19,150 area, but not, you know, not quite yet. We've not quite yet really cracked that back of that one. The key targets towards the top side currently are 19,500, towards the downside 18,800. Now, if you're trading this on a really small term time frame, we've already discussed the sort of 18,985 risk, the management zone. Oh, Smurfy Murphy, you've just subscribed. Awesome, fantastic. And we're seeing your name appearing here down below. If you just look down there below the video, your name's showing up, so that's quality to have you there. Aha, thank you so much for that. Right, cool. And we've got a warning sign at the minute with regards to this volatility possibility coming in here. Of course, the musical chairs are ongoing. As soon as Pass the Parcel stops on this one, then maybe we'll see ourselves going between both of those areas. Wouldn't be of great surprise to us. And the way we can translate that out the way for, you know, extrapolate on that idea is simply to remove the Bollinger Bands and kind of discuss this with regards to the shape and the structure of what we're seeing here, since those highs down the way, and then since of course those previous lows up the way, encapsulating the current price in amongst that sort of symmetrical triangle viewpoint. So of course there are two areas then to look to beyond where the Bollinger Bands were indicating to us really in terms of that chart there, as I just flick them on and off again, are of course up towards 9.9 and then down towards 8,000. So those are kind of your key areas, depend on which way we see this pan out. We're seeing an increase in volume ever so slightly, which is obviously actually though less than the volume that we had here, which was less than the volume that I had here. So actually over the piece of this thing we're seeing a decrease in volume, and that gives us a bit more sort of ease when it comes to looking at whether or not we're getting in some decent numbers with regards to the volume going up the way. I just want to make this a bit more visible for you all at home, so let me just make it a bit more visible. Maybe that's not actually even any more visible. If we make it all white, then you can see this is essentially what I was trying to say. So because we have this at lows, you know, coming in and taking out this average movement anyway, which I can use. I can just kind of borrow this the one line of our Fibonacci to draw this in. You know, see it breaking above this area in terms of an average volume thrust up the way would be more insightful come the time of any breakouts from this thing. Now it is an upward trend, so we have to bear that in mind. And of course, so far, what we've seen throughout this entire sort of period, this whole duration, is that overall patterns break out towards the top side. If they do break out towards the lower side, we don't look towards taking out our previous lows, generally speaking. So that way we can kind of sum up in general. If we do move down past 16,200 over the period of the next couple of weeks, then we can say that maybe we're going to start trending down towards that, towards Christmas. Well, you know, maybe over the period of the next couple of weeks, that's what we might have done, and then Christmas Day come along and we sort of, you know, take off again, depending on, of course, our ability to stay above this, and of course as well for this thing to play out bearishly, which it hasn't really overall done over the period of the last 6 months as well. So your sort of statistical chances would say towards the top side, giving you that area then at the top where we've previously had bearish divergence to say, well look, you know, if we're going to challenge up the way, we would need to push on past this and burn all of that off, otherwise we're somewhat in a negative situation. Okay, and that's kind of the current standings with regards to Bitcoin. You need to see this thing continuing to trend towards the top side on the face of it, 4-hour time frame showing us there's the potential for volatility soon. We do have this positive stance with regards to the DMI overall, of course, in the face of negative bearish divergence. The MACD down below not giving us massively fantastic readings, you know, in terms of these lows, of course, coming in here past there, we have to look all the way back to over here to find previous lows and whatnot on the 24-hour time frame. Obviously fairly extended up the way, and any sort of push down past this point of this type of trend line idea actually starts to give you some sort of negative heebie-jeebies really anyway as well. So we can look towards the 50% point of the Fibonacci to give us a sort of rough idea if we're pushing past that and looking to take out some of these lower areas such as 17,000, where we find of course the 618 pocket up to that 786. I will just jump in there and say happy hello to everybody that's joined us in the chat so far, and if you are just joining us, hit that like button. We've got a recent subscriber, Smurfy Murphy. That's quality to have a new Rocky Outcrop in the house. As ever, everybody in the chat, welcome him with open arms, please. I'm going to scroll over there and see the chat, but hopefully I'll see some people giving him a good welcome to the Outcrop family. Thank you so much for joining us. And what we will do after I just say hello to everybody who's currently in the chat is jump on over to look at Ethereum, follow that up with looking at Chainlink, follow that up with looking at Tezos, and then we'll see if we've got any time left over for suggestions from the chitter chatter. So cool, everybody, let's see. Rocky, fix the mic. Oh, screw. Right, okay, sorry. Fix the mic, says TradeSpot a couple of times. Right, that's awful. Is it too loud? Let me just see what the problem is. Stream will have around about, oh, let's see. Thanks for joining us. Hi, Susan. Hi, Navanethan. Hi, Rocky. What's up, everybody? RSI Class C bearish divergence on the weekly. It's game over, man. 1 million. We're seeing strange buzz coming from Mike Rocky check connections. Strange buzz coming from Mike check connections. Okay. It could be because I stood on my little USB microphone jobby earlier on, or it could be that the volume's just too high on it. Let me bring it down slightly and just check my settings. Thanks so much for giving me a shout out there. I'm glad I didn't go shout about that. I'm glad I didn't go through the whole episode with any issues, but who knows if I'll be able to resolve them, because I'm you know, not the best at resolving these things. It's 70% on the computer. Put it down to 65. Let's just see if we're still getting this strange buzz from the mic. Hopefully now that I've touched it, I've kind of given it that Midas touch. Let's see. By the way, right, cool. Okay, who else is in here? We have Zoner, we have Horn Hunter, we have Navanethan, we have K-Doc. Good to have you again. Thanks for giving me the heads up about the mic. Little hum for the mic since you shaked it. Oh, I broke the mic by hitting it, did I? Oh, sugar. Right. Yo, says Tony Wright. Hey guys, good to see everybody there. What's up, Rocky? Made it to another one. Good to have you here, Sean. Nice to see you again. Hoping the title isn't a reversal you see coming. A dip I'd like to add to my longs. Been waiting for that. Have a few key areas for ETH in the past 3 weeks. Well, we are going to look through the different cryptos, right? We're going to form our own opinion. We don't really have that opinion as such. It's just that we went into the weekend with a degree of weakness, and we've come out of the weekend not having shaken that weakness off yet, and we've got a few kind of key ideas to look to. Essentially, with regards to Bitcoin, you know, we want to see us continuing to move towards the top side. That's okay, and we do have this sort of consolidation effort going on here, giving us a chance perhaps to burn off any negative oscillations that are going on down below. Now, however, if that doesn't happen and we start to look towards these other targets being broken on the way down, eyes will all start to be affixed firmly on this area over here, where we have this significant previous low, of course, and various other things that go along with it. For instance, here in the 24-hour time frame, you're going to have the 20 moving average coming in at that point there, 18,500. What that we're looking to. But if I go up the time frames, you'll see then that this 20 moving average moves down the way, just as a simple sort of idea. For instance, coming down towards the 17,000 area here as soon as we get to the 2-day time frame, and so on. So you know, there's a good degree of scope for coming in here and testing these things. That would put us in for the potential for putting in a higher low and asking those questions at that time on that time frame. But of course, you know, overall things have been very, very good for a long time. But you know, right now it's worth bearing in mind that there's the potential for consolidation happening with the triangle which could break one way or the other, and that trading it within the range of that is obviously a good idea, with the awareness that of course something could happen one way or the other. That's mostly what it's about. So anyway, good to have you here, by the way, Sean, and as ever, good to see you, Susan. Good to see you, 3000 Trin. What's happening, buddy? Nice to have you here. You're going to want to have a wee look at the mic connection, Rocky. Oh gosh, I hope it's all right. Low volume lately. Not with the microphone, just talking about the charts there. Rocky isn't listening to us. We have been abandoned. I know I am listening. My guy Sal at the chat. Okay, cool. Nice to have. Where my guy Sal at the chat? In the chat. Who's Sal? Where are you, buddy? Say hello to us. Danny Morgan, evening, says Danny Morgan. Evening, Danny. Good to have you here. It's true, you won't take a breath until 32k. Rocky, fix the mic. I hope it's fixed. Is it fixed at all or not? Volume was fine. Oh, you agree the volume was fine. So I put the volume down, put the volume back up. Is it just I need to hit it a couple of times? Loud humming now. Unplug the mic. Oh, God. Right. Is there sound here? Voice, microphone? Noise? Nope, no noise? Nah, I don't know. You can hear me. Can you hear me? You can hear me. You can hear his device connect and unconnect. Finally, sound. Oh no, that's just the computer. You can hear. I can't tell if you can hear me. It says sorted, but I bet you get Neil Tyson back on. It seems to be working. We can hear you now. We can hear you now. We can hear you now. Well, fingers crossed you can hear me now, right? Let's just give it. I'll give it another couple of minutes just to make sure you still properly can hear me, and just confirm that. Just confirm that again. How many fingers am I holding up? Right, it's good now, says Horn Hunter. Thank goodness. That's a bit of a surprise, actually, that we managed to struggle back through this. Let's see as it all goes to pot. Hopefully not too bad. Hopefully not too bad. Right, I'm going to turn off the desktop audio, though, because my device seems to be doing this disconnect thing. Perhaps the mic is too close to my mouth. Okay, fine, fair enough. I'll just kind of keep it about here. We made it through, though, ladies and gentlemen. We made it through to this point here. So now is the time to take a look. Thank you very much for the confirmation, everybody. Thank you, Danny. Thank you, KDoc. Thank you, TradeSpotting. Thank you, NPC 00139582. Oh my goodness, is this going to just keep happening to me? I think I've obviously kind of busted my cable a wee bit in the shenanigans here. Don't touch anything. Everything will be fine. Let's jump on over towards the Ethereum chart, shall we? There's a few things we could look at, by the way, just so that we're aware of them. For instance, we have this gap towards the downside there on the CME chart, which lines up nicely with where this 20 simple moving average is. If we did come down towards the... Oh, great, Susan says it's better than it was before. Fantastic. Coming down towards the median line of this would be something. Sorry, I'm just distracted because my device is messing me up, popping up windows on my screen and everything, covering up the charts. Yes, if we did move down towards the 20 simple moving average, that would be a retest of that, as it could fill in that gap potentially, of course. And in terms of price action, you're looking down towards the sub 18,000s if that were to be the case. But obviously, we're finding that the 236 comes in here at 16,545. So, not taking that area out, and obviously then trying to close above the 17k area to avoid having a lower low would satisfy that for us in terms of a higher low at the same time. And overall, that could be a fairly bullish thing, providing we got a nice burn off of these moving averages and the divergences, etc. As seen here, this this tent poking up above the this is the 24-hour time frame, remember. It's the same sort of dealie on the daily as well. Looking back the way, we've never seen this sort of real rise up and then drop down in terms of ADX in the Bitcoin pricing in the past. Now I'm going to quickly unplug my camera and plug it back in again with the wire slightly positioned differently so it stops yapping at me. I think I busted something there. If this works, then it'll save me a headache because it's opening and closing those windows in the background. If it doesn't, then I'll just carry on regardless. SD sound now, again, SD sound, 5D sound, 5D, oh, it's even better than ever it was. Oh my goodness, I'm so glad to be bringing you this aural sensation here, ladies and gentlemen. Okay, cool, so that's us covered with in terms of regards to looking at this and saying that there's danger lurking. Okay, danger is lurking, just be aware of it, and you can carry that forward for any interpretation that you want to have with regards to looking at altcoins. A lot of people say if we see the prices go up, yada yada, if we see the prices go down of Bitcoin, then X, Y, and Z for altcoins, and have a formula with it. Well, I don't tend to attach too much significance to anything. As you can see, though, we've moved back into this wedge that we had before, which we got the measured move out of, and we've sustained movement within this zone overall with regards to the Bitcoin dominance price chart. Sorry. So what we managed to, this tied in fairly nicely with the salvaging of the movement of the Bollinger Band, and also tickling of the 618 golden pocket zone. Just tickling it in there with the price action, or with the domination action in terms of the Bitcoin dominance, and we're back in this zone overall. We could start moving towards the top side yet again. If that happens at the same time as Bitcoin price decreasing, naturally, then of course it's kind of bad news overall. If the Bitcoin price can maintain itself, go sideways or decrease kind of less, then of course alt season could be in. We'll have to keep an eye out for all that sort of stuff, but there's much more to the dynamic in terms of what we need to see happening with regards to Bitcoin. And the first port of call then, I suppose, to navigate away from the Bitcoin section of the world could be towards the Ethereum Bitcoin pairing here, and taking a look at how this could shape up over the next wee while. This is the daily chart that we have open at the moment. I've got a random circle there on the chart. Who knows what that's for? We can see that there's this tentative upward trend in the sense that the DI positive here is above the negative, and above the ADX, but the ADX here is orange, and that signals to us it's below 25. So we don't have that strength number really in terms of being above the so-called threshold, I suppose you could say, for that one, and moving towards the top side as yet. Of course, if we do see that going up the way and across between these two, we'll know that a short play is incoming. If we see them not maintaining their stance and moving apart, diverging away towards the positive direction, then of course we would have a decent enough long. Looking back the way we managed to maintain the 236 with our recent back test down here towards it, so we retested that, and then we've moved up the way. I don't like the word back test, but there you go. moved up towards the 382, and you know that 382 is going to be critical for us taking out this movement towards the top side, just in terms of course, this is the daily time frame, so this breaks it down on a lower term point of view for us, going between these 2 points just here and seeing that movements we're above the 236 currently, but we could take out the 618 and kind of disregard this Fibonacci and move towards the top side if we go past this up into that zone, you know, which is really the ideal place for this to be at. So looking in terms of prices for, where can I just please just let me get rid of that one, thank you. Looking at price action for the Ethereum Bitcoin pairing, things are looking like maybe, you know, they could be in line for recovering post this topping formation over here, which, you know, you could classify it whatever you want. Classic Wyckoff distribution, sure, perhaps, with this divergence here down below. Excuse me for the sirens out there if the 5D sound's picking that up. What can I say for you? It's just they're just always on the hunt for me. At these two lows here, what did we get? Only some bullish divergence as well. Springing towards the top side, then getting a wee bit too enthusiastic when we came in and touched the 50%, as Dow would love to see us doing, and then of course pulling back down within the Bollinger Bands, as John Bollinger would be so satisfied to see, and then jumping down the time frames. Then the most negative sort of thing is that we've taken out this area here, but this is not really sort of so substantial. You could draw it in a bit better over this direction, remove the Bollinger Bands from our distracting field of vision, and remember that of course that we're still consolidating as the time, you know, for the time being, with the potential to move either way in this one really quite nicely if we do get a nice spring past that zone. So that's cool. That's cool. If we can manage to do that, then of course drawing our attention back to 31 and then 33 is the two topside targets. Breaking out past this, I would say that of course, you know, the 29,632 area where the 236 is at is obviously going to be key for us. If we do break down past that, then who's to say? You could go all the way down here and perhaps even, you know, reassess whether or not this was a proper bottom, perhaps even put in a double bottom at that stage, you know, depending on how you want to look at it. So that would be, so like, you know, we're managing to maintain this. Now this line up the way I think is going to be something that we bear in mind as we go through the other coins here. Just a quick sneak peek to the future. If I jump over towards the Link USD chart, we're going to have to consider this alignment here as well amongst our bottoms. And when I jump over towards the XTZ USD chart here, we're still going to have to do the same sort of thing. I've got it positioned in a sense here sort of horizontally, and this was where it previously was in terms of our discussion with regards to this as being a potential head and shoulders. Okay, so let's just take a look over towards Ethereum USD. Didn't really pay any attention to the timings of the bits so far, but that was odd. But we're here at 31 minutes now, and I'm going to start taking a look at Ethereum USD. So I could actually edit the thingies as we go along, but I'll just leave that for now. Instead, I'll put a note in here in the chat. We're talking 32 mins ETH USD, right? Okay, cool. That's it in the chat. Thanks very much for everybody for chatting along, by the way, and it's good to have everybody in there. I can see some ha-has and lols and all that sort of stuff as we go along. So there's some good chat happening. Let's take a look then at Ethereum versus the OOS, the US dollar McDollarson. Now we have old stuff on the charts as well, and I do intend to like have a historical walk-in museum chart, you know, where we can go back and take a trip through memory lane, I suppose, with regards to all these different things on here. But always it's a case of looking forwards to the future and asking the questions about where we could be going next instead of looking back the way. Now we did have a pull down over here, and we do have this structure. Do I want to see it on log instead? I mean, it does bring up the bottoms a little bit, so maybe that's worth looking at. This overall upward sloping support line, which is still being respected. These lows which are coming in are still always higher lows along the way, and that's good to see. And we haven't managed to break that structure so far, regardless log, linear, whatever. What you're looking at then here at this point is questions. Are we putting in some sort of triple peak top here, which would obviously be like your head and shoulders, or are we putting in a two tops here with a potential handle? Now of course we went a bit higher there on the way down. Didn't actually look at that with regards to Bitcoin. We're still on the way for doing that, of course, with the cup with handle type idea coming in around here, but I'm not massively enthusiastic about that overall in terms of, like, dictating how you trade it. Just trade what you're seeing instead of what you're hoping to see, and that's a case of one of those hoping to see things. And it's even more the case over here in terms of the USD Ethereum pairing, where we're looking at that section of any sort of proposed handle being higher than the previous one, which was also higher, yada yada. So anyway, you can look down towards that having been fulfilled anyway in terms of movements like that having come down to the 50%. And the key areas for us with Ethereum really are going to be boiling down to our top area. So we've got 1, we've got 2, we've got 3. Will we come in and do 4th, and then the 4th time be the good one and take out key areas up above? Obviously this is us looking up towards not all-time highs, but certainly in terms of this chart where we can see any sort of previous liquidity. We can take a look at the historical one to see how that lines up with the big Fibonacci's, and we'll do that in a second. But of course then moving down past 558 is where we find that 50%, and of course we have this 236 in there at 574 and this node on the VPVR before a distinct drop off before it comes back in again at the 618 in there at about 466. So jumping over to the broader term, oh by the way, 4-hour time frame, seeing this volatility alert coming in here on the DMI as well. In the 24-hour time frame, we don't actually have that right now, but you can see that we're crossing down below the 40 line on the ADX here, and of course that, you know, is sort of the boiling off of the upward trend while we put in this high, which of course was bearishly divergent indeed between the previous highs and the way up. And then you could be looking at that picture of that distribution that we spoke about here in terms of the Ethereum Bitcoin chunk over there happening in with regards to this current price action if it were to sort of just spin around here and not move towards the top side. Looking at it then on this chart, and you see that we can come back into the pitchfork generalis area, having kind of long along the top here found resistance. Now it's not perfect, but it doesn't need to be. We don't do things on a perfect basis on the channel here. We can see though that we're coming into this yellow line, and zooming along to the left we can see that that yellow line that the price action's operating in it around about just now is of course the 382 coming in at 591. We're just below that in terms of this big movement. Now of course we moved up above 496, so in at 591 is where we find that 382 as being the next target that we have now satisfied. In terms of pulling back down the way, we could be looking towards any of these other numbers. So the smaller term Fibonacci makes things clear for us with this, with the 236 lining up however so conveniently with of course the last low in the chart. So we have this clear area of $500 here at this point to be of course bearing in mind for any potential pullbacks towards the downside. Now of course movements towards the top side are going to be initiated if we do move past first off at least 631 is our target, having been where our previous highs were. Bearing in mind of course that we have got divergence here on these oscillators down below between these two highs. Okay, so that's all visible to be seen, and this is where we are right now. So we need to be keeping eyes on these two numbers. If you're looking for one in between, then of course the pitchfork serves as a handy reference point for us looking there at sort of 565.83. If I jump back over to the other chart where we have our smaller Fibonacci pullback, Fibonacci zones and everything else, we know a few right above our heads. $600 where we have the 236 coming in at $600 here is clear area up above, and then down below 577 and 558, and with 572 575 in between, tying together fairly decently with what we're looking at with regards to these zones as outlined by the pitchfork and everything else that we've looked at there on Ethereum. So good to have you here, Johnny. Seeing this, seeing you here with us. I'm just going to check in real quick at the chat, see if I need to give any shout outs to any folks. Then I'm moving on to take a look at Chainlink, and then I'm taking a look at the other one. So I'll just write in again here so I can say that what the sort of keep an eye on things. So I'm just going to write this in here. We got 38 mins. Hello in chat, then Chainlink USD for personal reference in there. So yes, Johnny Smith, yo Rocky, please give a shout to my main man Banksy. He's your biggest fan. Peace. That's quality. Thanks very much, Banksy, for being my biggest fan. Imagine that was true. If that's true, that's awesome. But you know, imagine it was true. That would be quality. Banksy, of course, being the notorious artiste general, let's get a Banksy picture up here for a laugh. You may recognize that picture from Google Images there as what I have in the background of today's thumbnail. If Banksy was my biggest fan, though, you could rest assure everybody that would have better thumbnails than what I have. Maybe if he were to be a fan, he would like that inimitable style of complete pants that I really started off with. Anyway, so we've got the last one that he did was a hula hoop girl over there. And this broken bike, oh, isn't it lovely with the circle around her of the wheel of the bike. That's quality, right? Thanks very much there. Cool. Nice one. So what else do we have? Danny Morgan. Rocky, how do you get that volume control zone thing on the right hand side of your chart? How do you get this? Oh, you're talking about the VPVR. Simple enough, my friend. You go over here, you type search, you type in VPVR. That doesn't work. So then you're like, why did you type it wrong? And then you actually type it incorrectly. VPVR. Visible range is the one that you'd be looking for there. Now, of course, there's other people who use other things. I prefer to use visible range. The way that this works is it takes what you've got on your screen into account. So if I zoom out there, you'll see it change. Zoom out again, it changes some more. Zoom out again, and it changes some more. Zoom right back in again, and it changes back. So that's where the data comes from for this. It's called the VPVR. It's available to people who've got a pro account or whatever the paid account is on the no, this is Banksy, he's just a Sparky. Yeah, I know, imagining. Yeah, sorry, yeah, so you can get that if you've got a paid account on TradingView. There's a link down below in the description for some savings or whatever on that one if you want to use it. So that's cool. Susan Zoner, we said hi to everybody else. That's sweet. So we're moving on. 39 minutes, 50 seconds, really 40 minutes then. I'll just hit that in there. 40 minutes is Chainlink USD. 40 min link USD. Okay, cool. Nice one. So now folk will be able to scroll back up the chat and find their timings for their particular sweetheart coin. And tuning in here then with Link versus USD, we can see first off we've been rising towards the top side, but for the first time in a long time we've not put in a higher high as yet with any subsequent moves off the back of a low. However, let's just bear in mind that there's a couple of little bits of you know, downs here, inflection points here that we've managed to stay above so far with these two lows. So far we've not managed to turn that trend around. Now if we do turn this trend around, things would start to look a little bit kind of tasty in terms of a potential move down the way. You can see here that we came towards the top side and put in this shoulder, this head, and then this shoulder. So this would be around about where your neck is, and that gives us that opportunity to put in that line sloping up the way. And I'm sure the drawings before will give us one of them anyway. And as you can see, there's a parallel channel in the background there. So there's also a Fibonacci retracement. I suppose I could, you know, use this now and then hide it off the screen so you don't get too distracted. Essentially, looking down the way, if we do break outside of the parallel channel, I'd be looking as a target towards this 1033 where the golden pocket was, or 1040. Between that area and 1075 would be the sort of next zone down the way. 1185 being your potential sort of trip up zone if you were shorting that aggressively. On the downside, having of course taken out the 382 first off, obviously where we're in challenging just now if you were to be doing that, and obviously these two lows that we had previously. Now in terms of this downward, slightly downward trend, which isn't, because it's not lower, we can't look for divergence. In terms of the upward trend, we didn't have divergence coming into this zone just here. You could say that there's hidden bullish divergence if you wanted to, in terms of this lower neckline point of this head and shoulders here at the right hand shoulder, and that low where it was actually higher than the previous low, whilst being of course visibly lower on the MACD down below. So there's that to be considered. Of course, the same sort of structure on the RSI as well, so that gives you a nice failure point. Of course, looking here then at sort of $12.63 in terms of the parallel channel itself. Now the topside targets are a bit more interesting in terms of their convergence, you know, or their confluence, or their whatever suffix you want on that word. Looking in here at this area where the 236 is, and of course the median point of the parallel channel at the price point of $14.20-ish, $14.30. And if we break above that, then of course the next target towards the top side does actually become another higher high up here where we put in, you know, in terms of our body closes at the top end of that parallel channel, looking back up towards that $16 movement area. So there's various low risk trades to be set up, setups in terms of how you want to manage things, just as sort of certain examples: long positions, short positions, all sorts of positions. If you're thinking about them, sort of that target towards the top side there, then you'd get an easy 5-to-1 trade. Pardon me. If you're looking at using these areas of our last closes to manage your risk, and you can see here how that adds up, quite easily just by looking at your previous closes. And then if towards the downside, and then as well, if you were doing the same sort of idea and you were looking down towards getting that 618 movement, then there's various other easy enough trades that you can do on a 5-to-1 basis in terms of coming back up and not managing to supersede the line, dictating where the parallel channel was and reclaim those lower areas. Then of course you'd be looking at something along those sorts of lines there, perhaps, potentially, just as a couple of ideas out there. And I'm not a financial advisor, this financial advice, it doesn't come anywhere near constituting that, but what we can say is that that overall upward trend line towards the top side is something that we clearly want to maintain in the face of, in the market, some bearishness. Now here in Link, I'd love to see this be the one that actually even bucks any trend and decouples, in the sense that it could continue being bullish while other things be bearish. If that were to be the case, that would be quite nice to see, and we could do it by maintaining that line upward, whilst we see other ones potentially failing it. If we see this moving down the way in terms of Ethereum, and in terms of the Ethereum Bitcoin pairing, and in terms of the Bitcoin pricing, and our clear sort of overall upward support area here, which is movements past those zones. If that were to happen elsewhere, I'd like to see Chainlink being able to be the beneficiary of having had a degree of recourse being taken by the bears previously, and a degree of reconciliation perhaps coming into the markets when we look at the overall movements down the way that we had when we revisited the 618 from the lows up towards the highs before coming down the way. Now, so that would be the nice positive case scenario for us looking over the period of the next couple of weeks, if there's going to be a trend reversal or anything else to look out for, or indeed just movements towards a particular direction. So that's cool. I think that's going to kind of cover us for Chainlink. Let's take a look. 45 minutes there, so I'm just going to stick in 45 minutes, and we're talking XTZ. So there we go for folk. That writing's not so great, but hopefully that benefits anybody who's just joining us. You can look back up the way, you'll see a couple of other sort of timestamps I've chucked out there into the comment section. Thanks very much for joining me if you are just joining me, and hit that like button. I would massively appreciate it. It really does help bring wider viewership to the videos, and of course everybody benefits, and that's a great thing. So nice one. And let's just see, thanks very much, by the way, to everybody who has already been taking part in the chitter chatter. I'm just jumping on over towards Tezos versus USD, and we have this line coming in now, and you can see that we're challenging it in a way that we haven't been challenging it on the other charts. If you position it in a way that allows you to make that argument, of course you could make the other argument, and you could reposition this as such. Now, what you would require for this to make sort of a degree of sense would be for this to turn into being a wick towards the downside, simply wicking off this as we've seen in the past. Otherwise, we can just kind of bear this price point in mind, really, as being a key area for us, and we already spoke about it several times in the past. What price was that? Well, of course, it's the handy number of 2 to the 2 to the 2 to the 2 to the 2, 2.2 spot if you work in banks and you want to talk like that. 2 2 2 2 2 2 2. Okay, so if we go past 2 2 2 2 2 2 2 2 2, that's twos, all the twos. Let me just be very clear here. 2.22222222222. Then of course things aren't looking that fantastic for us in terms of the structure here. Now we have this pitchfork in the background showing us that, of course, if you move down past that, you could be coming back up again if you don't take out 217, etc., for instance, down below us. Now, of course, we have a few other areas to look to. Our previous lows coming in at around about that $2 area, and there are various other fairly obvious things that we could point out to kind of put the destruction on that message. But what we do know in terms of where we are right now is we're below the 236 Fibonacci retracement point that we want to be above at 230, and we're just above the 2222222 price point here, having found our lows so far today down there at, lo and behold, 2222222. So you might remember that we talked about that number. I think that's probably fairly lodged in your mind by this stage, and we can dive over to a different USDT chart to remind ourselves ourselves that in terms of how we pull back so far, we've actually done quite a significant job coming back down towards this 618 and not having taken out in terms of our wicks the downside with these significant previous low areas, but we certainly have in terms of the body now. We haven't moved, we haven't actually closed today out, but just casting our eyeballs over to the left. You can see that we are currently below that 24 area. So if you want to be moving towards the top side, got to be taking out that 24 area and perhaps 28 where that 236 is, or just think about it as 230 if you like, in terms of actually seeing some movement. But where we are right now is obviously asking a couple of questions. Now there is a slight difference in the price in terms of 3 decimal places in, but we're not seeing a massive stretch apart in terms of the HitBTC prices. This is something we used to talk about for all the time on the channel. If we do want to look at this trend that we had here, where we do see, because the prices are slightly different kind of price points for things, that the 236 is coming in at 236, and then this line here at, what was that again, 257 being key towards the top side. Yeah, overall moving up the way, we've got that key support line. I've got it drawn in fairly black and white on which one is it? This one here. This is what we're looking to, and whether or not we can stay above it. If we can't, then maybe we need to refresh our senses, go up towards a bigger time frame, kind of clear away everything off the chart, and remind ourselves that what we were seeing here is, of course, a big uptrend. We are putting lows here overall. That anything not taking out these lows at the minute is good. If this is a sort of shoulder, or a shoulder here, a head here, a shoulder here comes in and forms, and we stick around the $2 area, then bust past previous areas in terms of the 240s and the 250s that we spoke about, just looking at where the wicks are, bearing in mind that head and shoulders and everything else are going to be looking on different time frames at different, maybe this is like looking here and finding key support at 265 to push past. We can see how that would work in terms of wicks. So just looking towards those areas and saying movements up there, maybe you see an inverse head and shoulders play out across the broader term time frame, going back onto the 24-hour time frame and measuring back the way in terms of the distance that we've got here. That's a 75-day sort of 100-day effort, so it certainly would span out in terms of the longer term storyline for this thing if we do want to look towards that as the futures. And that's going to be quite positive, but that is in terms of the positive case scenario, moving up past 250. Negative case scenario is going to have the same thing on there with 2 points. First off, of course, the $2 up to 210, and then of course $1.80 being your sort of Alamo for positivity on this one. Thanks very much, by the way, for people who are chilling along here watching the TA, and we've got Etienne as well as ever, who's just said to me, nice daily TA on Link USD. Rocky, thank you for your work. Thank you as well for tuning in here. It's all forming part of this community. It's great to have every single one of you on board. That brings us to the end of the Tezos look that we're doing. Really, we can now dive down towards a smaller time frame and see if there's anything that's worth bearing in mind in terms of the overlooking. Not overlooking things. Is this a descending triangle that we have here? Worth looking at the way we sprung back up during these points where we could be buying. We're not seeing hidden bullish divergence here or anything like that. We're not managing to take out these previous highs. We want to be looking towards this to see if we get the upward side movement, and of course the key support area coming in at that 22222 area in terms of breaking down past this. Now it is a zone, and we're going to call it down to 215 in terms of movements, but you've got this blue area there on the ADX. We've got a strength of trend, but it's burning off in terms of the 1 hour. What are we looking like in 15-minute chart? Okay, so yeah, we really need to see a turnaround here, and it's definitely primed in terms of the potential for oversold, overbought, oversold type conditions there on that one, but not very, very, very good. And we've got this head and shoulders here with it. So in the normal sense, in terms in terms of the 24-hour time frame in this section just here, if you're looking at this overall, as an inverse, but over the last 100 days, that's interesting. But in terms of this section just here, you've got this just regular head and shoulders potential with that white line giving you your neckline and the downward side targets. All good rebuys until such times as we take out this green mark here coming in at the 185 zone. Cool, that's us done for that one. So nice one. Going back over to the chit chat, and we have a timestamp for us of roughly, what we're talking here, 52 mins. 52 mins. Chit chat, and then I'll tell you what, we'll only be here for 30 seconds anyway, so actually 53 mins is VET, because I saw my man Trade Spotting saying that he was going to want to look at VET in the show. I think I caught that at the corner of my eye earlier on. So, also, Zoner said, can you have a look at the BTC weekly RSI double topping thoughts? So we can do that now in the final 15 seconds before diving over to look at VET. BTC RSI weekly time frame, double topping. You're talking about compared to over here? Are you talking about, no, you're talking about these two, oops, sorry, the wee cat ears that we have on the go here. So in terms of the cat ears, yeah, cool, little double top, sure. They're just cat ears though. I mean, let's look at the perspective on things. But sure, it's there, it's definitely there. What we were also seeing, if I hide all the drawings off here, is that this came in higher and this was lower. So you're looking, if you're gonna make some sort of comparison along the way in terms of divergence, well then you're seeing it there as well as being a possibility. And what I think about it as well is that I think that it translates quite hefty into hefty divergence as you go down the time frames, as you keep an eye on that slope towards the downside there on the RSI, quite grotesquely all the way down. So that's what I think about this in terms of this one. And of course, you know, it's giving you this doubly top area, gives you this the potential for divergence. We're obviously past the really tiny swing failure point, but with a lot of the week to go, having only just started this one, so I'd say you're too early to say there. But if you're looking at it from that point of view, then that's your swing failure point. That's obviously far too harsh. Looking really instead back towards the lows, and it's a massive distance away. We're seeing something's happened in terms of the channel. TradeSpotting donated 887. Rocky, thanks for all you do on Tezos. Can you also take a look at VET? Wow, thanks so much for donating the Tezos. That means what TradeSpotting's done there is he's opened up the comments or the description section down below and found that donation thing there. By the way, thanks so much for that. That's quality, and you've got your name on screen down there. Just check it out, TradeSpotting. So that's quality. You and Smurfy Murphy taking up the famous spots there below the video. Thank you so much for that. It's quality to have that donation. Really do appreciate it. Right, cool. Okay, yeah, so that's what I think about it. We're looking for swing failures. In terms of this one, if we move down below that point there, then obviously that is your big term swing failure. But we're moving on to VET now, and I'm going to take this in properly. 54, 50, it'll be 55 minutes. So 55 minutes, we're looking at VET. 55 mins VET, TY TradeSpotting. For that one, cool. So let's move on to VET USDT, I think, is what we're going to want to look at first off. And I imagine I've probably got some old stuff on the charts from the past here, although it's not showing me anything just now. I wonder if I also have VET calculated by TradingView. Has that got the drawings on it? Yeah, this is where all my drawings were before. So just to quickly check in here with the history, is that money you owed for pizza? TradeSpotting? Probably. No, it's not actually. Just kidding. What we can see here is that there was these. I did this technical analysis in the past, and I obviously got out my old brush, as I so often want to do, and did this scribble, as you see me doing all the time here, with the key area lining up right in there, that 618. Looking over to the right, you can see that that price is 0.009, and indeed if we came back down to touch that over there on the weekly time frame, this is obviously the weekly, and we're trending hard towards the top side, you know, like so far with regards to this weekly. The key areas, I suppose, right now comes in at this other 618 area on the left there at 18 cents, where we've managed to arrive to at the minute. So, you know, this could be a profit taking time for us, and therefore I don't want to see the profits. I don't want to see us dropping back down below this area just here at 0.015. In terms of just our first brief glance look at this thing, but I'm going to jump over to a clean chart here and put the T on the end of this one. And take a fresh look at this for you, because that one's fairly messy in terms of what we've been doing, but we've done what we wanted to see happen so far. So overall, you know, we could say that that's a healthy enough looking chart, having been so much, you know, working within the along the lines of reason, so to speak. So yes, just to reiterate there that everything's nice and clean to see for us. If I draw that in from those highs to those lows, you can see we're right in at the golden pocket. Movements down below the 618 are obviously, you know, speak for themselves negatively, but movements down below that 0.015 areas where we find that 50%, and that would obviously start to be negative for us. But If we came in for a higher low overall in this one, then this price point where we find the 236 would offer up your most sort of delicious looking rebuy opportunity if this were to actually trend towards the top side. However, not managing to take out these previous highs over here doesn't bode very, very well in terms of a trend towards the top side. So how about we remove that instead? Remove that instead, and just assess, how far back down did we come with relation to the movement that we had up the way as well, just to get to where we got to now, to put everything into context for us. So going back over to this, you can see here that the 236. Oh wow! So they were just about to take out the 236. So nice one. This is a key inflection point for us in there at 18 cents. Having taken this out at 17.9, so yeah, 18 cents, call it. We're now invalidating this Fibonacci, having done the golden pocket towards the downside. So so we've done that. We've done the hard work. Now, can we actually go in and do the glorious top area for us? So the next target really does have to remain at looking up towards this top. Now, that's on the proviso that you're managing your risk in it around about that 18 cents area. And a quick and easy way, to put that context into people, just so they've got an idea of that, if you don't mind trade spotting. Now, this isn't financial advice, and this isn't me telling anybody how to trade at all, but it's just kind of to put the things into context. You want to be looking up, if you were looking up towards your previous high, then how could you manage your risk in a healthy enough way? Well, you could maybe make the argument, if you wanted to sort of just briefly, that movements down below 16 or 17 cents essentially. Well, what we're looking at here, 17 cents. Yeah, if you managed your risk at around about 17 cents, you could just take that from where we are now with a risk to reward of 5 to 1 just by the time you come up towards our previous highs, at which point you'd be able to offload a certain amount of your position and ask, are we coming in at this stage with the bearish divergence? Now, we had bearish divergence already here between this high and this high, as you can see here and here, and indeed on the DMI and on the MACD in this zone. So that's that's happened, and that's led to a 618 Fibonacci retracement. That's good. Now, we don't have to immediately trend out of here towards the top side. Just overall don't want to see us taking out the area of where that 50% is. And to put that into context for you in terms of just the movements, first off as well, we can see this node on the VPVR from the recent price action in terms of where is obviously a significant area, and popping a Fibonacci around that, you can see that taking out the 50% here is the golden pocket, right where we have this 618. I don't know if you can see that on your screen, so I'll just make it a different color so it's more visible for you. Make it white. So we have the 618 golden pocket lining up perfectly with that 50% area in there. So we don't want to see us going down below that generally, in terms of a close and whatever else. Of course, the main area to be looking to is that 10 cents area. I wonder if that was what you wanted to see. Was it versus USD or was it versus Bitcoin? I wonder if you want any more detail on that. There are a few things, of course, as ever, that I haven't mentioned. Weekly time frame testing the bullish control zone. Any pullback from this point would merely look like we were being rejected from this on our first pass, as is so often the case. Going down the way towards the 3-day time frame, you can see an example of that right here, having done that already. Now, if we do crack on towards the top side, we have already achieved that sort of idea of having been rejected on our first pass with the strength of trend operating towards the top side. You can see that head and shoulders that came in on the RSI very clearly here, while we had an Adam and Eve with a sort of distinct difference top, but of course that being bearishly divergent kind of makes up for the lacks of the double top pattern before we got a measured move coming off of that to bring us down to the 618. Perfect there in terms of regards to how we could be positioned here overall. Good rebuy opportunities if you want to be sort of basing it off of the trend, which remains our friend until we fail to retake out 22 cents towards the top side, or indeed and then thereafter take out 9.90 or so toward 9 cent 0.09, whatever that is, 9 cents, 9.9 cents, whatever. Then what you can see here in terms of the 2-day time frame is if we did start to look towards maybe the potential for a pullback is coming in here as we get the bearish divergence. Now, of course, we are above tick the 236, which gives us that ability to go towards the top side, and find the resistance and our support. And then, of course, we would not be looking at divergence here on the RSI, for instance, down below. We don't have enough strength of trend sort of momentum built up with regards to the DMI here to really say that that's, on for happening right now. But we can see that we're on the cusp of that, and we could very well easily do what we've seen so often in the past, where you kind of come back into this area and then go up the way here, as you're seeing this kind of overall structure happen. For instance, over here, as you see that happen, that sort of thing happening all over again. For instance, if we find the strength of trend coming in the way, are we seeing that as we continue down the way towards the lower time frames, going down towards the 24-hour time frame? You see, of course, the bearish divergence then giving more credence to the terms of a pullback, while we see the VPVR signaling to us that this is, of course, a key area for support and resistance and liquidity in this zone. It's a liquidity zone here in general, and it's easy to be sort of drawn in with a sort of box that kind of covers that zone area overall. And your downside target, to be getting sort of sketchy, comes in at 16.5 cents, and your upside target is 19.33333 as well, in terms of moving past that zone, and that's very good to see. Going down towards the 4-hour time frame, then at this point you can see we've got this double top. If we do pull back a 50% area that we spoke about earlier on with regards to this here, from this point onwards, then what you'd be looking at is the potential for a cup with handle on this one. So you'd have your top here, your top here, then of course you're looking for a 50% retrace towards the downside to kind of fit in with the cup with handle point of view. So I'll just draw that out for you in graffiti here. So you'll be looking for that 50% move, and then after that point you're looking to see, can we take out the previous high? So just drawing this in again clearly, then you see that if you go past this area of the 19 cents, then of course you could be looking towards the top side, and the measured move of that thing is essentially along the lines of this here. And if I just shrink this down a bit so you can see, then that puts in a target at 25 cents for you there. So that's a nickel, isn't it, or is that a quarter or whatever? You tell me. But that's what you'd be looking at then thereafter for you. I hope you like that technical analysis there, my friend Trade Spotting. If you do, let me know. I can of course do some more for you if you so desire. Would send out a warning sign, of course, pullbacks from this point here. I've got a high at this point of the sort of the second lip of the cup, and of course then that would then potentially lead to this triangular pattern on the RSI as we would fill out that way, as you can see here. If we had to just mess that up again, if we had this sort of idea on the go, then of course look out for that too with regards to oscillations in around this area and what could be happening. In terms of the volume, we don't have as good a volume profile with regards to cups with handle here in this time frame as you'd really like to see, although there is a degree of correlation with what we're looking at. About on the 1 hour time frame, yeah, that looks a little bit kind of better, although these peaks in here are not so great. But what are you going to do? And also it's whatever, what are you going to do? But that could be what we're looking to. And of course in the immediacy, this is your biggest resistance line up above at where we're looking. Perfecto, says TradeSpawn. Lovely. Zoner, your message was retracted. What's that all about? What did you say? Cup and handle, man. Cup and handle, man. It's actually, it's called cup with handle in the textbook. So I appreciate that. Most people would call it a cup and handle, wouldn't they? But it's a cup with handle, which is kind of somewhat frustrating if you are someone who likes good English. Cup with handle. You'll see if I just do a search here, it's called the Investopedia says cup and handle, but it was J. William O'Neill who called it cup with handle in the first place. So stock charts have got it right. So J. William O'Neill was the one, but of course I would say cup and handle normally. So there you go. History lesson for all of us. J. William O'Neill was the one that wrote that book. If you're interested in reading that book, by the way, How to Make Money in Stocks is the book, so I'll just search for that and give you that information. It's an interesting book. I've read it myself. The guy himself, J. William O'Neill, William J. O'Neill, whatever, was the type of chap who liked to only go long. If you want to actually buy these sorts of crap things, you'll find not these crap things, these great things. You'll find Amazon links in the description, so I can shill that out to people. Amazon links in the description down below, folky wokies. Whatever. Not links to just to Amazon. Whatever. Going back to the charts, is there anything anybody else wants me to take a look at, by the way, or are we kind of more or less wrapped up here? It's great to have everybody along for the ride. Oh, I hope I've not messed the browser up too much. I think I'll fix it here in a second. Yeah, it's seen that. Right, cool. Yeah, cool. Nice one. So let me see. Have I missed any questions to anybody said? He's not an arty, it's just a Sparky. That was a good laugh. Nice TA. Thanks so much, Etienne. Cool. Zoner said thanks. You're welcome, Zoner. Is that money you owed for pizza? Trace fun. That's funny. Yes. Haha. If we do take out 22, then it is a cup and handle. Where might the target be in that case? The 1414. Sure, you could look up as high as the 1414. Is just not as high as. I mean, we can see our target here takes us in a bit higher. By the way, let me just line this up with the Fibonacci. I'm assuming that you mean between the the left lip and then the basin, then the 1414. Then, but you could also be looking up as high as that. I would say that if you're looking beyond 20, to be in all honesty with you, looking past 22.7, so looking past 22.5 is really starting to get quite greedy, where we see the 1618 coming in at. And if I actually just go up towards the weekly time frame and zoom in again so you can see what we're talking about, that this is a significant area. That would be where our previous top was, and if this is all not a cup with handle in terms of this movements down here, just let me hide all this. If this isn't a cup with handle that we're seeing about to happen, then sure, who's to say that we don't actually see the cup with handle come in here and happen in that way, in which case you've still got ultimately the same target to where we're talking about now, with your 50% movement down the way potential, coming in here at that point in there. But then you're doing it from a far greater distance away, and of course it's a much better trading arena to be in terms of the long-term position working out for us with regards to that one. So I would just caution you in that respect. Okay, so then I would look towards the 1618 because we can see where that would join up in terms of if we were to actually have a proper cup with handle. If you want to be talking about proper cup with handles, then go ahead, read that book. He didn't really look at them on the low term time frames. He'll talk about things like several weeks run into them. So is this a cup with handle? Not really. In terms of like what Bulkowski might be saying about this as well, if you're interested with regards to that. Although again, he wouldn't be looking at this on its low term time frames as all of this. He might be talking about how there's the potential for I was going to say bump and run, but there isn't there. No. You really just look at this currently as being a twin peak pattern. If it breaks down the way and if it breaks up the way, then you're just talking about the horizontal resistance that we have on the chart here. Looking back the way, and that liquidity zone that we already covered. That's the key areas for us. Yeah, cool, nice one. Well, everybody let me know how you're getting on there in the chat. I'll come back over to the chat box with y'all and see what your chitter chatter is there, and if anybody wants me to take a look at any other coins. As for myself, I'm satisfied that we've done a pretty good look across the markets. Covered in terms of the sort of headline of today's episode, there's a big upward sloping line on all the charts, which we can look to in terms of just saying we don't want to see the prices break that. Of course, there's variations across the different markets. Link perhaps could even stay above its as we see Ethereum and Bitcoin go below theirs. Of course, in terms of broad time frames, we need to bear in mind that we've been in an upward trend for quite a while. This, of course, is just us leaving off the VET one, go back over to Bitcoin here to catch up with us, but seeing that, overall upward trend, great. Bit of consolidation here, fine. This can turn out any particular way. The divergence running up to it is what led us to be in this situation, so it doesn't necessarily impact us in terms of an overall bias too much, but any movements down the way you're looking at it that could break anything, of course, have to take into account the question of between whether or not that is therefore erroneous or the break. So if we just say that is a retest of this orange line we're kind of hovering over, that's just another test of this overall wedge type channel. If this is where we're looking at instead, and this was a break of it, then catching it again and moving down the way, as you can see, this lines up with that symmetrical triangle that we've got and the previous price action. So if this is the case, then of course, you know, the importance of that one I think speaks for itself. Are we happy on that bombshell to leave off with the technical analysis for today, having revisited the Bitcoin pricing? I wonder, let me know as I dive down towards the 15-minute time frame and line this up nicely on the screen with a couple of little bits of extra additional information for us, so that we can see as we run out the end of the episode what the key areas are for us to be aware of. Key area number one is of course the 236, as you can see here where I've drawn that line in, and that is of course at that price point of 19k. 19k is a key area for us, right? That's the first one. Moving towards the top side, we know that this area, before we see the drop off in the VPVR, is the next good area, and that comes in at 19.5. okay, that's our top side for us. And then in terms of looking down the way, we know that there's a couple of key areas. You know, pushing past 19k in and of itself doesn't necessarily mean anything unless you're talking about movements down below 18.8. so like that's the next one, 18.8. but really if you're going to be including these areas up there, we're going to have to bear in mind that 18.5 is the next area towards the downside. Okay, the way I write 5 evidently isn't so convenient for using a mouse to do it, because it often looks like 3. And that's it. 24k in 4 days, says KDoc. Bring it on. Famous words for Scottish people to be saying, bring it on. That's always a good one. What was it? So what did we have there? What did you say? 24k in 4 days. Boom, boom, boom. 24k in 4 days. Let's see. So 4 days is, of course, we're on what, the 7th, so that puts us in at the 11th, and that is up here. So we'll call this the KDoc, the star of the KDoc's map. This is your treasure map. That's X marks the spot for KDoc, and we have the KDoc price point line. So we're looking up here, and we'll just draw a nice arrow around it and make it green, and we'll call this the KDoc. This is the KDoc line, so everybody, you saw it here first. This is where the prices are going over the next 4 days, up to X marks the spot there nicely for us. That is of course the KDoc price line. KDoc price line, 100% guaranteed price action prediction. Yeah, cool, nice one. They say it's different this time. I don't trust them. Dump it. So then we also have a cautionary tale coming in here from our friend Zoner. So you've got KDoc giving us this here. KDoc, that's our price line, and then we have the warning from Zoner that says they say it's different this time. Okay, I'm going to just stretch that out so we can all see where we're leaving off, and I will tell you that I'll be back again this time tomorrow, but a bit earlier, at a slightly different time, because I will try and actually get around to having a consistent time for the episodes, but I can't guarantee that I'll actually be able to maintain any of them consistently just yet. I'm kind of getting into the swing of things. Hopefully back here a little bit earlier than I was tomorrow. We've got 19 concurrent viewers. I want to say to everybody who's managed to stick through with the video so far that you are special people. I really do appreciate it. We are at the very beginnings of a fantastic movement here. Of course, this is the Rocky Outcrop channel, which will at one point in the future be highly respected and possibly the very best place on YouTube for crypto technical analysis. Now, it's beyond me to give myself that accolade already, but I like to, so I'm going to say that if you're here already, well done at getting in on the ground floor of the very best place on YouTube to do cryptical analysis. What type of analysis do you like? What's your favorite? Are you a tomato ketchup man? Are you a mustard man? Or mayonnaise man? Let me know in the comments down below what your preferred type of technical analysis actually is, and I will catch you all later. I'm going to fling up a screen here telling people when I'll be back tomorrow fingers crossed, of course. And that will do for today's episode. Yes, thank you so much to everybody for joining in. Cheers for the live, says K-Doc. Zoner says, awesome, mate. Really hope everybody had a really enjoyable time. Be sure to bring your friends along next time, like our good mate Johnny Smith, who brought along the not so famous electrician with the very famous electrician, or very famous name, Banksy. And of course, let's see everybody back again here tomorrow for more good stuff. Like and subscribe, says Zoner. Yes, thank you. And if you're watching this video after the fact as well, after it went live, don't panic. Great stuff here. You tuned in the right place. This is just as good technical analysis live as it, later. We always look across a few different time frames, so ensure you enjoy that and come back again for more tomorrow. And let me know what your preferred time is for a live stream as well. And that's it. That's it for now. Going to stick up the end screen. See you later. Thanks so much. Catch you later, Honor Hunter. Catch you later, K-Doc. Catch you later, Trace1. Catch you later, Zoner. Catch you later to Susan, Johnny, Danny, and of course everybody else who hasn't had a mention. I'm sorry, Bruno, for instance, and of course Rich, good to see you as well, who didn't get shout-outs earlier on. Thanks very much to NCP000 for tuning in again today, and everyone else who made it along, such as Navanethan and Sean, who are very, very, very much welcome. 3000 Trin, you are a hero as well. I'll see y'all tomorrow. I've been Rocky Outcrop. This has been FOMO-free, cryptical, technical analysis with mustard, with ketchup, and a whole lot of love. See you next time.